Okay, Chapter 2. And we're going to now look at cost accounting systems. This chapter is called Job Order Costing. It's the main system we're going to look at. Okay. Now, the chapter itself, well, wait a minute. Yeah, that's it. The chapter itself, we're going to look at job order costing system, then the process costing system. Then we're going to study how we accumulate costs. How do the costs flow? And then how do we assign them to products being produced? Study objectives here. Explain the characteristics and purpose of cost accounting. Then describe the flow of costs of the job order costing system. Explain the nature and importance of a job cost sheet. Look at predetermined overhead rate and look at how it's used. Now there's the problem. That's what we're going to have. Then we're going to finish it by looking at the under and overhead applied. Now to begin with, job costing system and process costing. Accurate product costing is essential to a company's success. If we're going to bid on new jobs, we're a contractor or we're in the bidding process, we have to know exactly what our costs are going to be because we're held to that bid amount. Also, if we're producing a number of different products, we must identify which one is giving us the most profitability. We must know and be able to measure the cost of producing a product so that we can set the selling price and make sure we obtain a profit for our production. And we look at different jobs. Now, cost accounting systems involves measuring, recording, and reporting of product systems. The company determines both the total cost of producing everything and then the unit cost of each product. And it's very crucial to the company's success to have a good cost accounting system. And because that cost information helps us determine which product to produce, the amount to produce, and what price to charge. That's the important thing. We must charge enough to cover our costs and give us a profit. There are two types of costing systems, two basic types. Now, every manufacturing system could be a combination of both of these or a single one. Number one is the job order costing system. Number two, which is the complete opposite of a job order, is a process costing system. Now, a job costing system assigns the cost to each job, or we call it batch of goods. A job could be a movie. It's made by Disney. We'll trace all the costs that were used and consumed in producing a movie for Disney. Or it could be a batch of 225 wedding invitations. That too is a job. And what we're going to do is trace all the costs that was consumed in producing 225 wedding invitations. Now, a job may be for a specific order or may be for inventory. A job might be the production of one desk, or another job might be the production of 1,000 desks for Abu Dhabi University. Key feature is that each job or batch has its own distinguishing characteristics. Different size, different amount of material, different amount of labor for each job. In each job, they all get the same amount of material and labor, but for the difference or batches or types of jobs, the costs will be different. Our objective here then is to produce or compute the costs per job. And to do that then we, wait a minute, I'm sorry, that's a job costing system. We measure, compute, not percent. The other system is a process costing system. Here, this is a system we use for large volume of similar items. Think of here in LA the Coca-Cola plant. The Coca-Cola plant produces bottles or cans of Coca-Cola. Every can of Coca-Cola gets exactly the same amount of material, labor, and overhead. So if the production plant is one that produces like cereal or compact discs, they're all the same, or paint, every can of paint has the same amount of ingredients in it. That production system is called a process costing system. And that means the production is continuous and we accumulate the costs for a specific time or period, either a week or a month, for the process. And we assign it to the process for that particular period of time, and then we divide through by the amount of output. So oil, for example, here is continuously processed. Computer disks, same thing. Coca-Cola plant. Each product that is produced has the same amount of material, same amount of labor, same amount of overhead in it. Whereas in job costing, you see each product produced, each job, has a different amount of material, a different amount of labor, and a different amount of overhead. Now let's follow the job order costing flow system. First of all, remember our three cost elements. They're direct materials. Number two, direct labor. And number three, manufacturing overhead. All production costs, product costs, are either direct material, direct labor, or manufacturing overhead. Okay, manufacturing costs are assigned, first of all, to work in process, which is an asset account. And then when it's completed, it's transferred to finished goods, which also is an asset account. But when it is sold, the cost is transferred to the cost of goods sold, which is an expense account on the balance sheet, on the income statement, I'm sorry. So here we have it pictured: raw materials, factory labor, manufacturing overhead. First of all these costs are assigned to work in process. Then, when we complete it, we credit work in process and debit finished goods. And then, when we sell it, we credit finished goods here, and we debit the cost of goods sold. This is how it looks like in the accounting records. When I buy in raw material, I debit purchases. And when I put material into production, I credit purchases. Now the direct material goes directly to work in process. The indirect material goes down here, down in here to manufacturing overhead. Now notice the manufacturing overhead. I'm going to have on the debit side the actual overhead incurred. And when I put materials, indirect materials like glue and paint and things like that, they're not directly related. I don't know how much goes to each product, so they're indirect. So I put them in manufacturing overhead. Factory labor, all the factory labor incurred, then I transfer that factory labor, this is an expense, into the work in process. Now, again, the direct factory labor goes right here, direct labor used. The indirect goes down here. This is the supervisor's salary, the forklift guy, all those people who are necessary to produce the product but are not directly related to the product. Now, I accumulate all the overhead down here, depreciation, insurance, repairs, rent, blah, 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 actual overhead. But I don't know what the total actual overhead is going to be for the whole year, so I must make an estimate, and I apply that overhead right to work in process. Now when the job is finished, I complete it, and I move it, credit work in process, and move it to finished goods. When I sell it, I credit finished goods and debit cost of goods sold. And that's how the costs flow through my accounting records. Two major steps: accumulate the costs, and the costs are either material, labor, and overhead, and then assign the costs. Now, accumulating manufacturing costs is easy if we're talking raw materials. The raw materials are debited to raw materials inventory, and then at this point they are not assigned to specific jobs. Example, I simply buy 42,000 worth. So debit raw materials, credit accounts payable. Factory labor costs consist of the gross earnings of factory workers, payroll taxes, fringe benefits, and so on. And therefore, Wallace Company incurs 32 of factory labor, 27 relate to wages, 5 to payroll. In January, the debit entry then is factory labor debit, wages payable, employee payroll taxes payable. Manufacturing overhead costs, many types, all kinds of machinery costs, electricity costs, indirect labor, indirect materials, and so on. I debit those to manufacturing overhead like I showed you. Now, we use what's called a job cost sheet to determine the cost of each job. All right? And this is how it looks. You give the job number. Each job is different, so there's a different number. The quantity, a job might be one item, it might be 100 items, it might be 1,000 items. Okay, so now, here we have a column for the date, and whenever direct material is requisitioned and put into the job, we record it here. When direct labor time cards, we put the labor hours there and the labor rate, and then we assign the overhead. That's exactly, this card will follow the job all around the factory floor. And as somebody works on it or gets material or labor, they will record that material or their time here. So we assign raw materials. There's what's called a materials requisition slip, which authorizes the fellow who's controlling the raw material inventory to release the materials to the job. Now those directly go to the job, go to the work in process. The other materials are part of overhead. So here's a material requisition slip. The assembly department, job number 101, date, and so on. Quantity, handles, stock number, 500, 500 times 200, $5 times 200, $1,000. This is the guy who asked for it, or requisitioned by, received by, costed by. Now, factory overhead labor costs, well, those are time tickets. Every labor worker has to keep track of their time. We know how much we pay them. We know what their hourly rate is, and so on. So we multiply the time by the rate, and we then have the amount of factory labor that went into the work in process, the direct labor, and the amount of factory labor that's indirect, so it goes to manufacturing overhead. For example, assume the total factory labor costs $32,000, which 28 is direct labor and 4 is indirect. Well, we debit work in process, that's my asset account for the direct labor. We debit manufacturing overhead for the indirect, and we credit factory labor. So there's your time ticket. Started at this time, stopped in, 4 hours, worked on job 101, and therefore we have the cost of labor that went into job 101. Now, manufacturing overhead is different. Unlike direct materials and direct labor, this cost cannot be directly related to the product. Okay? So therefore, it must be estimated basis. It must be assigned to the product, not traced to the product. It's allocated or assigned. And so we must come up with what is called a predetermined, that means I guess ahead of time, what the overhead rate will be. Overhead rate. For example, based on the relationship between estimated annual overhead costs and expected annual operating, we determine what the base is going to be. We're going to accumulate all the costs. We're going to estimate the total manufacturing cost for the whole year. And then we're going to select an activity base. That is something that's directly related to the product, like direct labor hours, like direct labor costs, or like machine hours. We can trace each one of these costs as exactly how many machine hours was consumed on each job, or how many direct labor hours. The company will choose one of these, okay, and then use it all the time. For example, we estimate at the beginning of the year, and we estimate for the whole company. We may use a single one, or we may use different rates for each department. Okay, but the formula is simply this. Not simply, this confuses a lot of people, but basically, we estimate at the beginning of the year the annual overhead costs, all manufacturing costs that are not direct material and direct labor. We estimate the level of activity. How many machine hours are we going to use the whole year? Or how many labor hours? Or what's the total labor cost? And we divide one into the other to give us a predetermined overhead rate. And then we assign that manufacturing overhead to the work in process when the jobs are completed. So we get the activity base times predetermined overhead. So we look and say, okay, how many machine hours have worked on the job? That's the activity base. And what's the predetermined overhead rate for each machine hour? And then we say, okay, Job 1 had so many hours, job 2, job 3 had that, and we assign them based on that. Example, direct labor costs. We're going to use costs here. We estimate at the beginning of the year the overhead costs of $280,000 and the direct labor costs of $350,000. So therefore, the predetermined overhead rate is the total overhead cost, $280,000, divided by the activity base of $350,000, which is 80%. What that means is for every dollar that I spend on direct labor costs on any job, if I spent $100 on a job, I'm going to assign $80 as that job's fair share of the overhead. Overhead applied is $22,000. That is 28 direct labor hours times 80% of 28. So therefore, the journal entry would be debit work in process, 22.4, credit manufacturing overhead, 22.4. Okay? At the end of each month, the balance in the work in process inventory should equal the sum of all the job sheets on the floor of unfinished jobs. So you see the T account is in the accountant's office, and that balance should equal the total of all the jobs that are being worked on the shop floor. Now, when the jobs are completed, what I do, I transfer it from work in process. So I credit work in process and I debit finished goods. And then, example, I sell job 101, I now sell it. I sell it for $50,000 and it cost me $39,000 to produce. So the journal entry, I sell it on account, debit accounts receivable $50,000, credit sales, then debit the cost of goods sold for the cost of the product, and you take it out of finished goods inventory. So you credit finished goods inventory. Debit cost of goods sold, credit finished goods inventory. There again is the summary with numbers this time, just like I did before. This is the amount bought. This is the amount that was transferred. $24,000 went to work in process. $6,000 went to manufacturing overhead. This is the factory labor. It was transferred. $28,000 went to work in process. $4,000 went to manufacturing overhead. All right, now the third cost element, we assigned it. We figured there's $28,000 direct labor costs were worked on this job. 80% of $28,000 is the amount of overhead I'm going to assign, and so I assign it here. So therefore, the total cost of my work in process was transferred, $39,000 goes to finished goods. Then when I sell it, goes to cost of goods sold. And at the end of the month, there's my balance in raw materials inventory. There's my balance in work in process inventory. I have nothing in finished goods. So, a summary of the document flows in the job order cost. Material requisition slips goes to the job cost sheet. Labor tickets and predetermined overhead rate. And that's how I accumulate the cost for a job cost system. Now, the problem is, as we go back here, you'll see that actually in manufacturing overhead, I incurred these costs. I assigned this. Well, notice I incurred more than I assigned. $1,400. I had a debit balance, which means the actual amount of overhead was $1,400 more than I assigned. So that means that I underapplied overhead. A debit balance in the manufacturing overhead means that overhead was underapplied. I didn't apply enough. I didn't cover it. Overhead assigned to work in process is less than the overhead incurred. Okay, so the actual overhead is here. In the records, the assigned was here. If actual is greater than applied, then it's underapplied, but didn't apply enough. If I applied more, if actual is less than applied, then it's overapplied. So what do I do about that? Well, if it's a credit balance, it's overapplied. Well, what I do is at the end of the year, I take whatever the balance is and I charge it to the cost of goods sold to bring it back to actual. And that then completes the Job Costing System Chapter 2.